Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, and I'm Alec Matthew. Well, if you've got questions on equity, especially this week, it's a short week. We're all looking forward to holidays, but I'm sure those questions still remain. You can send them to us on all our social media platforms, or you can call us on 022-454-04141. You can also mail us on askbq@bloombergquint.com. Only make sure to add the Ask BQ hashtag.
All right, but before we get to the individual queries on the show, let's also tell you what's happening with the markets. It's a great start to this new week. And yes, as Alex mentioned, it is a truncated week. Both broader market indices as well as the benchmarks are doing pretty well. Nifty is inching very closer to the level of 11,700. Remember, the weekly options is also giving you that range of between 11,600 to 700. Bank Nifty is perked up almost close to 200 points and Sensex 2 up almost 115 points in trade. The broader markets, however, are outperforming. You've got 0.5% gain coming in for the Nifty Mid-Cap 100 index, and the small-cap index is up nearly 1% in trade. But guys, just be careful. India VIX, once again, as the markets are definitely in green, but VIX is also in green. Usually that moves, that has an inverse relation with markets, but 21.6 inching very, very closer to its 52-week high of 22.5. So watch out for India VIX. And in terms of sectoral gainers and losers, it is only the Nifty Pharma index today, which is lost some ground. It's down 0.5%. Stocks like Sun Pharma have seen some losses coming about. And in terms of sectoral gainers, you've got indices like Nifty Metals, Realty, and the Auto Pack is doing pretty well. Nifty Realty is up almost 2.5% as we speak. But in terms of Nifty contributors list, a lot of stocks are moving around, a lot of heavyweights, earnings reaction seen for TCS, Infosys. As you can see, TCS is the biggest contributor and the biggest laggard is Infosys. HDFC Bank, which comes out with its numbers, I guess, on April 20th. Watch out for that one. And Tata Motors is contributing. Reliance Industries not doing too much, but I guess it is mildly in the red. Hence, you can see that 3% drag in terms of index movement from that stock. But it is Tata Group companies which are shining in today's session. So TCS has set the benchmark, I guess. And besides that, you've got stocks like Tata Motors and Tata Steel, which came out with its production numbers a few days back. That's also up nearly 4% in trade. I just want to highlight two stocks, PC Jewelers and Rain Industries. They've been moving in the last few sessions. In fact, PC Jewelers is up 9%. On Friday, the stock moved nearly 16%, and Rain Industries continues to shine. I believe in the month of April, if you could just pull up that chart if it's possible, the stock's given you returns of nearly 39 to 40%. But in terms of losers, not too many. That's the 1 month chart, 34% higher for Rain Industries. DCB Bank is down in trade. You've got stocks like Action Construction and something like Tata Power. They've lost ground, and you've seen losses between 3 to 2.5% coming about there, Alex.
All right, well, that's a snapshot of how the markets look currently. Let's get our two experts in for the day. We've got Amar Singh of Angel Broking and Parthiv Shah of TRACOM Stockbrokers, who are here to answer all of your questions. Welcome to the show, gentlemen. I do want to start with, well, if not a name, but a sector that's been in focus, Jet Airways. You've all heard the updates with regard to the latest the deadline that went by on Friday with regard to the fund infusion. A few names that have come in, we've reported on it. 6 names have submitted, as we understand, the expression of interest. But still awaiting clarity on what is to come. That stock is up about 0.4%, but really the focus, Parthiv, is on the other players in the space and whether or not they will benefit, at least in the short term. On the fundamentals, would you pick Indigo? In fact, we've got a viewer, Mulashri, who's asking for the short-term view on Indigo and whether it makes sense to really invest in this and perhaps capitalize on that vacuum that might be left. Jet, I understand, is operating with only about 6 aircraft as of now.
Alex, we've been recommending Interglobe Aviation on your channel right through levels of lows that it hit of 850, right up till 1000 levels. And today at around 1450 levels, our sense is a lot of positive news is already baked into it. Positive news not only in terms of change in the operational parameters. We are expecting Interglobe Aviation decent set of numbers, and numbers in the sense both revenue per average seat kilometer and also the overall cost structure that the challenge that they've been facing, and even the crude. I think yes, that's a slight challenge right now. So my sense is that at current levels of 1450, I think it won't be a bad idea to book some profits, wait on sidelines, wait for better entry levels. And there's a lot of talk about the Jet Airways. I think the international flights being advantageous to the incumbents, which is SpiceJet and Interglobe Aviation. But one should notice that, Interglobe Aviation and SpiceJet still don't have so many international routes. So it won't have an immediate impact, but nonetheless, the domestic operations of jet which are suffering certainly has a lot of spillover impact and also giving a lot of pricing power to both the incumbent players. Nonetheless, I think we still prefer Interglobe Aviation for a longer term horizon, but after some correction, I think it would be a prudent move for first time entry players in Interglobe Aviation.
Okay, so Interglobe Aviation is the preferred pick in the aviation space, coming in from Parthiv. Let's move on and take some more queries. Riddhi Shah writes to us on YouTube. Thanks a lot for writing in your query. He's asking, Tata Motors and also Steel Authority, is it a good purchase, keeping in mind the next 3 to 4 months? Amar, if I could come to you, Tata Motors is one of the biggest gainers. I think the stock's almost at high point of the day, up almost 6.5%. Steel Authority also doing well, 3% higher. Technically on the charts, if somebody now wants to make a fresh entry in both these stocks, keeping in mind the time horizon of next 3 to 4 months, would you recommend a buy here, or they should wait it out?
I would say not at the current levels, because technically if you look at Tata Motors on the daily charts, somewhere around 240, 245 is a crucial zone of resistance. Because what we are witnessing in Tata Motors is that the stock made a low of 129 in the first week of February, and then it has bounced back significantly from those levels. And on the long-term charts, the stock would meet with resistance around 245 levels or so. So this would not be a good level, because the risk-reward ratio wouldn't work in one's favor at current levels.
Okay, and what about Steel Authority?
Yeah, looking at Steel Authority of India, what we see is that, again, if you look at the stock remains positive. But again, on the higher side, it has got, on the long-term charts, it has got crucial resistance around 60 and 61 levels. So where we could witness profit booking. And also, if you look at the daily charts, we saw that the stock correct from 60 levels to 56 levels. So till the time, I would say 60, 62 is a very crucial zone of resistance. Only taking that out would lead to any significant and upside rally in sale. Otherwise, we could witness profit booking around those levels.
All right, that's the view on Tata Motors and SAIL. Let's take a bit of a long-term query, and perhaps this query will really help a lot of our viewers out there. Muiz Ansari has written us a mail. He's asked for 4 to 5 stocks, Parthiv, that can potentially give a return of 18 to 20% every year. So over a longer period of time, a compounded annual growth rate of 18 to 20%, that would be obviously the ideal portfolio that anyone would look for. And I'm guessing that he is talking about a SIP method. So what stocks would you identify for him?
Firstly, the viewer will have to understand the stock market returns are never linear, and it's very hard to give a call of 18 to 20% per annum. It's more about the compounded annual growth rate of your portfolio, which can be to the tune of 18 to 20% with the right stock selection and with patient investing. So if one has a 5 to 7 year horizon, then these are some of the stocks which I feel can probably have the chance of giving such returns. So I think in the list that I would talk of, it would be sectorally diversified. The first stock would be from the insurance vertical, which would be HDFC Life. The second stock would be a banking stock, which would be Kotak Mahindra Bank. The third stock, which I feel in the industrial sector, which can really outperform going ahead, would be ABB. Here I feel the power sector is looking up, and also the industrial automation and all the industrial capex going ahead, I think should give reap good benefits. And this stock has not done anything since the last 7 years. The fourth stock, I believe, could be from something like in the engineering space. And in the engineering space, we are quite upbeat in terms of, if I have to give a name, Larsen & Toubro. Again, a very safe, stable stock, and I think the ROE expansion going ahead and the working capital cycle improvement can reap rich dividends from this stock as well. And the last stock that I would suggest would be from the port sector. I think a stock like Adani Port, I think it's extremely well placed going ahead to capitalize on the volume growth in the port terminals, and also they surpassed 200 million tons of handling capacity, which can further go up, and the balance sheet quality has also improved from the intercorporate loans. So I think these would be the 5 stocks that I would suggest to hold on for the next 5 years to get something around 17 to 18% compounded annual growth rate.
Very pertinent point there about it being being careful, especially with your long-term investments. Stock market returns are not linear, Parthiv mentioned, and that can be shown very clearly by the return that you saw in 2018 as opposed to the first half or the first few months of 2019. And
that's right.
The kind of returns that we've seen.
Parthiv, just a follow-up question. I think majority of the stocks that you've highlighted, HDFC Life, Kotak, ABB, L&T and Adani Ports, they are large cap stocks. On similar lines, I think Vignesh wants to invest into mid-cap companies from a longer term horizon. So is there anything specific in the mid-cap space that you would like to recommend?
The only reason I've highlighted more of the large cap names is because I think our sense is that mid caps would take some time to rally. The only reason being that everyone wants to wait for this big election outcome to get over, post which I think the confidence will again rebuild, and then slowly and gradually the capex cycle will start, the banks will start lending in more aggressively. So that's where the mid and small cap would again rally. But nonetheless, yes, there are some selected names in the mid cap and small cap space where also I feel the risk element could be slightly higher, but the reward could also be higher. So in the chemical sector, I think we feel the story which is panning out in Gujarat Fluoro, which is basically into fluorine chemistry and fluoropolymers, I think can really do extremely well over the next 3 to 5 years. So this is one mid-cap stock that we like. In the industrial and also in the consumer related segment, I think 3M India, which is like one considers a large cap stock because of the price, which is at around 24,000. But if you see the market cap, it's somewhere around 24,000, which is like a sweet mid-cap spot market cap. Here also, we believe that all the things that they're doing in terms of new product launches and the growth that they've shown can really reap very good dividends going ahead. And I think also in the steel sector, I believe a stock like Jindal Steel and Power, which has to just sweat its assets, it's already done all the capex, and also the power which is looking up, I think can also surprise to the upside over the next 3 to 5 years. So these will be the three mid-cap sort of stocks where the risk element is high, but again the reward could also be high if everything pans out as per the plan.
All right, let's move to a short-term query. Nishank Rai is asking about Titan. Let's pull up the longer-term chart and see how the stock is done. From what I can see, towards the end of last year, it essentially started a rally from levels of 730 odd, and it's reached levels of above 1,090 as of now. Just a question for you, Amar. What he's asking is there room for a rally? And he's asking if 25% is possible from the current level in the next 6 months, and whether a post-election rally can be expected on this stock.
See, looking at Titan Industries from a long-term perspective, the stock definitely continues to remain extremely strong technically on the charts. However, if you look at the short-term charts, we're seeing that the stock has corrected from almost 1150 levels or so. So ideally, a very good level to enter if there is, because right now we're seeing some correction. So a good level to enter is somewhere around 1,000 or so. That can be a very good entry point for Titan, because then there is a very good potential of an upside. So I would say that wait for some correction towards 1,000, 1,020 levels. That can be a good level to enter the stock.
Okay, that's Titan Company for you, doing good. In fact, valuations, I guess, is one thing which has been a concern for the longest time for companies like Titan or anything in the FMCG pack. And we're getting a lot of your queries in the FMCG space. I'm just going to club two queries. Parthiv, Banu wants to know which is a better bet between Dabur, Marico and Emami. And one other viewer of ours, Sivakumar, wants to know, is Britannia or ITC a better bet for long term? So let's talk about Dabur, Marico, Emami first.
Of the three, I think Marico would be my most preferred pick. Luckily, the copra prices have cooled off, which bodes extremely well for a stock like Marico in terms of the margin expansion. Also, the management is quite upbeat in terms of a decent volume growth, especially based on the fact that they have launched a lot of new products, and they are also trying to target the breakfast market via their oats variety, which can definitely, I think, do wonders because this is an under-penetrated market. We've seen even likes of Nestle wanting to launch a lot of products in this segment. So I think Marico has all the right product positioning and also a very strong brand equity, and I think this is one stock that I'd like to hold on for the next 3 to 5 years. Talking about the other stocks, I'm sorry, can you help me with the names of the other stocks you mentioned?
Britannia versus ITC, which one is a preferred bet?
No, Britannia is fantastically well for its shareholders in terms of the returns it has garnered. But at around 65 times, I believe that the valuations are extremely stressed and it cannot afford to have even a single quarter of earnings miss, which could really derate it by 10 to 15%. So I think my sense is that I'm more comfortable talking about ITC in terms of purely on valuations at 26 times FY20 earnings. I think ITC seems to be a much better bet, and also ITC is scaling up its business, which can give some sort of competition to a larger player like Britannia. And not only the biscuit segment, but their entire FMCG pack is doing extremely well, and slowly and gradually I think they're also going to work on the margins. So the cigarette business is a decent cash cow, and I think the FMCG business scaling up can create a lot of value in the long term for ITC shareholders.
But how much time, Parthiv, do you think that the non-cigarette business, will take to contribute significantly to the bottom line? Because I think in the past decade, they've been trying to ramp up, but we've not seen any significant contribution coming by.
Yes, I think that's a very appropriate question, Navneet, because this is where I think a lot of analysts are trying to pencil in down whether to give that FMCG multiple to ITC or not, because the cigarette business has all the tax implications, etc. But our sense is that the management is talking about a 1 lakh crore sort of a top line by by 30, and even if this company by FY24 were to touch a top line which is like around 30,000 crores, or for that matter 30 to 40,000 crore, then I don't see a reason why the FMCG vertical won't deserve a market cap of somewhere around 3.5 lakh crore. Right now, ITC's entire market cap is around 3.5 lakh crore. So our sense is that the growth in the cigarette business, its cash flows, the other businesses, along with the FMCG business, by FY24, ITC from here could easily be a 2x sort of an idea. So I think we are bullish on the FMCG business, and that is certainly going to scale up with the discretionary spend and also the per capita GDP crossing $2,000.
All right, Rangarajan Balakrishna has got a short-term query for you. Amar, this one is on Tata Global Beverages. At the current level, he's asking whether it's a good time to enter for the next 3 months. The stock is currently at around 219.
Yeah, looking at Tata Global Beverages, I would say that the stock currently is in a bull phase, and technically I would say that yes, one can definitely look at buying the stock, and only one level one needs to watch out is that it needs to breach the 220, 221 mark, because that's a crucial zone of resistance for the stock. Breaching that level, then the stock has a potential to rally towards 250 odd levels. So what we are seeing is on the long-term charts, it is moving from oversold territory. On the short-term, intermediate-term trend, the bullish momentum continues to remain. And even on the quarterly charts, the stock continues to remain strong, and it has actually just about to breach its last quarter's high. So that's the reason I've talked about 220, 221 levels. Breaching that level would mean that the stock has a potential to rally towards 245, 250 levels.
Okay, 1.6% higher in today's session. The next stock we're going to talk about is Ashok Leyland. So just pull up the chart. We're getting multiple queries on that one. On Facebook, Raveen has written to us. He's bought at 92.5 for short term. He wants to know if he should exit since he's in the money and put his money in something like Tata Motors and TCS. And also on YouTube, Freddie has written to us. He's bought at higher levels of 128 and he wants to know what to do with this one. So Amar, I'm going to come back to you on the charts. If somebody is bought at 92.5 in the money but also at higher levels at 128, what would you advise both our viewers to do?
Yeah, I would say that one who's bought at 90, 92 levels, ideally he should look at booking profits around these levels, because 97, 98 technically is a very crucial zone of resistance. Because if Ashok Leyland is not able to breach that level, then we'd witness profit booking in that particular stock. Only sustaining above 97, 98 would lead it towards a rally of, I would say, 108, 109 levels. So he has the option of, if he wants to hold, or if you got multiple lots, then ideally one he can book and rest, and the second one he can hold, because above 98 it has a potential to rally by almost 8 to 10%.
Okay, Parthiv, the next one is for you. These two counters really, after they split, have underperformed dramatically. So we're talking about Syntex Industries and Syntex Plastics. So we've got Siddesh Bane on Facebook and Naveen Agarwal on YouTube, who have respectively bought into these two counters. And they're asking really what to do. Should they hold on or should they just book their losses?
See, very frankly speaking, I think both these companies and the Syntex group being so old, I think what we have seen is that the financials and especially the cash flow statement don't really match up to what the street was expecting. Not only that, I think they have been continuously acquiring new companies at a point in time when the balance sheet was stretched. And the move to kind of demerge the two companies was to create more shareholder value. Rather, I think what we have seen is that ever since the demerger has taken place, the stocks have collapsed from their highs by 70-80%. And we realize one fact that whenever the market, I think, gives such a treatment to any group or any stock, there is something that the market is a lot more aware of in terms of the future developments and what problems the company internally has. So my sense is it's better to exit these companies. And if you want to stick to the plastic industry, I think the best stocks would be something like a Supreme Industry. I think it's a bluest of the blue chip. And I think even for a long-term horizon, this can be the stock that you should own for in your portfolio.
Okay, let's take our next query on Wipro. Nirhar writes to us on YouTube. He's asking if he can enter Wipro at this price, and his time horizon is 1 to 2 months. The stock's up. If I'm not mistaken, I think the board meeting is lined up this week to consider buyback, so keep that in mind. Amar, on the charts, can a fresh entry be made at 287 with a time horizon of 1 to 2 months?
No, I would say the rather wait, because if you look at the stock on the charts, on 26th February, it had made a high of 292, and from there it corrected all the way to 253, 54 levels. So buying around 287, 88 levels, so one would be buying very close to the previous top. So I would say that that's not a good idea. So rather one should wait for some correction. Correction towards 275 levels ideally can be a good level to buy, because in that case the stop loss needs to be below 264 levels, and then one has a good opportunity. So I would say rather not buy the current levels, because the previous stop is definitely going to be respected. Breaching that level, yes, and sustaining above that level, then we could see a rally towards 315, 320 levels.
Parthiv, you've already listed out the stocks that you prefer for the long term with regard to the SIP route, but Shalom Ranga has got a few stocks that he wants you to really ratify for him. You don't need to go into the absolute details. HG Infra Engineering, Reliance Industries, IDFC First Bank, Bata India. Are there any stocks out of this list that you would say he shouldn't consider?
See, the HG Infra, I believe he can take a pass on that. The rest of the three stocks are good in quality. The only question is that I think these are the typical stocks where I think the current valuations probably don't permit me to ask him to buy in bulk. I think, but if one is willing to go in an SIP route for the next 6 to 8 months, then these three stocks could be accumulated. I think that would be the best strategy for these stocks, which are good in quality, which have good long-term future, but current trail multiples are a little expensive.
Well, it's that time of the show where we slip into the rapid fire segment, but before we begin, I'd just like to keep or remind our experts to keep their answers as short as possible. One line will do, just so that we can accommodate as many questions as possible. Raveen K. Pai wants to know whether it's a good idea to invest into SBI. We've already talked about, in fact, Parthiv, we were just talking about this. The valuations of Reliance and SBI, are they too high to consider a fresh entry?
See, I do believe Reliance is looking a little expensive. In terms of SBI, based on the peer comparison with most of the public sector banks, it has run up a lot. I would want to see the results, let it cool off, and then probably take a call to be it.
Okay, the next one is on Tata Motors. Ramesh wants to know what can be the upside level for the next 3 sessions. Amar, what's the level on Tata Motors you would watch out on the upside?
I would say that on the upside, close to 238, 240 levels is a level one can look on the upside.
Okay, Parthiv, a couple of more stocks for you. You've already spoken about Ashok Leyland, I believe. Yes Bank and Tata Steel. Would you invest it, or would you keep holding these stocks?
Yes, for Yes Bank, but Tata Steel, I think I would prefer Jindal Steel and Power for 2 years.
Okay, and Parthiv, Natco Pharma bought at 570. The time horizon is 1 year. What would you advise?
Yes, I think 1 year and above, I think certainly hold on to this stock. Valuations are cheap and the growth prospects are good.
Parthiv, Rakesh Arora wants to know about Godrej Consumer on the fundamentals. Would you recommend a fresh entry?
Results have been laggard of late, but I think we are very confident in the management. So certainly hold on if you have a 1 or 2 year horizon.
And do you like Indiabulls real estate, Parthiv, from a long-term perspective?
Not really in the real estate pack. I would prefer Mahindra Life Spaces.
Okay, GVK Power and Infra bought a significant quantity. We're talking about Vartik's query, 10,000 shares bought at 7 rupees. Parthiv, what would you have to say about that?
Try and take an exit. I think the debt issues won't get resolved soon, and these could destroy further value.
Amar, a technical view on stock like Godrej Consumer?
Yeah, looking at Godrej Consumer, I would say that the stock currently is witnessing some sell-off. I would say rather stay away from the stock.
All right. Well, I do understand that there are several more questions that our viewers have put forward, but unfortunately, that's all we have time for in this particular edition. I do encourage you to tune in again tomorrow, and we'll try and take as many questions as possible. On that note, let me thank both our guests, Amar and Parthiv, for helping our viewers with their queries.
Well, but remember, we're just a tweet post or a call away, so please keep your queries coming, and we promise to address all of them through our shows. For all previous episodes, visit our YouTube channel or website bloombergquint.com. Stay tuned. Up next is Power Lunch.